called depreciation. However, in taxation, we have an expense called investment allowance, to what we call capital allowance, in place of depreciation. How do we treat the rent and rates? So rent and rates. How do we treat the rents and rates? That should be allowable expense. Then we have general expenses. General expenses. How do we treat the general expenses? General expenses. How do we treat the general expenses? That should be allowable expense, unless otherwise there's additional information to say something contrary. Then you have the next, we call it value added tax. Value added tax. Value added tax. All forms of taxes, there should be non-allowable expense. All forms of taxes, that should be non-allowable expense. All forms of taxes, those should be non-allowable expense, should be non-allowable expense. So then we move to the next, we call budgets. Budgets. How would you go about budgets? Remember, this is blocks, so we just expand. How would you go about the budgets? Budgets. Budgets. Look up here. We say that in taxation, that relates to fixed asset, then that should be non-allowable. Together, that should be non-allowable. If you have a budget that relates to a fixed asset, because that's not a revenue item, and the capital, it's a capital item, then that should be non-allowable expense. Understood? Give me a yes if that is understood. Respond with a yes if that is understood. Perfect. Respond with a yes if that is understood. Great. So then we proceed to the next. We're being told that as it stands, when you have a budget without additional information, we call it allowable expense. If you have budget without additional information, then we have it as allowable expense. So we can check the additional information if you have. So then we proceed to the next. We have what's called purchase of furniture. How do you treat purchase of furniture? When you say purchase of furniture, how do you treat purchase of furniture? That's a capital expenditure. We treat it as a non-allowable expense. We treat it as a non-allowable expense. So then we have the next, what's called salaries and wages. Salaries and wages. Salaries and wages. Remember, this is a partnership. Remember, this is a partnership. So under partnership team, under partnership, salaries to staff is allowable. However, salaries to partners, do you think salaries to partners, should it be allowable or non-allowable? Remember, this is partnership. Salaries to partners. Suppose it's all salaries to partners is non-allowable. However, salaries to staff, we are going to treat them as allowable expense. We are going to treat them as allowable expense. Then we have the next information. So we are told that legal fees. Somebody says non-allowable. No, check. So in an exam, look up two things altogether. If you have legal without additional information, if you have legal fees without additional information, that is outrightly allowable legal fee. So if you have an exam and you're given a legal fee in the income statement and there's not an additional information, then we are going to treat it as allowable expense. Are we together? So if you're told salaries to partners, then you know there's a portion for the partners. However, if you're not told salaries to partners, then we treat it as salaries to staff. We treat it as salaries to staff. Martin, are you answered? Then you treat it as salaries to staff. Martin, give me a yes. Martin, respond with a yes. Perfect. And I was also saying something very fundamental, that if we have this legal fee and we do not have additional information, then we treat that additional legal fee as allowable legal fee. Respond with yes. We will treat it as allowable legal fee. Respond with a yes. However, in most cases, for example, that is for the PFT, when you're given a legal fee, always an additional information that is added to that legal fee. There is always an additional information that is basically added to that legal fee. So then we move to the next, we're being told to treat the interest on partners' capital. Interest on partners' capital. Interest to partners are non-allowable. Interest to partners' capital, drawing by partners, salaries to partners, and all payments to partners are basically treated as non-allowable expense. Respond with a yes. Those are treated as non-allowable expense together. So if you look at that income statement or the P&L, the profit and loss, we are basically being told this partnership made a profit of, it made a profit of 1,597,597. To Copper that this partnership basically made a figure of 1,597,000. So what is that? That is an accounting profit. Are we together? So we call that accounting profit. Are we together? We call that accounting profit. Respond with a yes. We said that accounting profit is normally different from what we call the taxable profit altogether. So we said that for accounting profit, which you've been given, accounting income profit is basically prepared by accountants. And these accountants are basically using accounting principles. Then this is basically reported to the shareholders altogether. However, as a taxman, if you're presented with accounting profit, because accounting is different with taxation. Number one, what is the difference? Number one difference we say that number one difference basically comes from, we say that in accounting we have depreciation. In tax, we do not have depreciation altogether. So in this income statement, we can see accountant has depreciation, but we say in tax we do not have depreciation. Instead of depreciation, we have what we call investment allowance. So this accounting profit that has been provided, a figure of 1,597,000 should be should be adjusted to get what's called a taxable income. Switch off the video, Juliet. Should be adjusted to get what's called a taxable income. Kindly, Juliet, switch off the video. Should be adjusted to get what's called a taxable income. Respond with a yes. So I want us to move to the additional information. So look up. So we're being told that out of advertisement, advertisement expense includes shillings 120. We have advertisement of 380. Advertisement expense includes shillings 120 spent on acquisition of a neon sign. The shillings 120 that is spent on acquisition of neon sign. How do you treat neon sign? The neon signs. So that's a capital expenditure. So that expense for 120 out of 320 out of 380 is non-allowable. So we need to adjust it by adding it back. So we proceed to the second additional information. The examiner tells us that general expenses comprise of the following. That if you look at the figures for general expenses, the figure of 50, it comprises of the following. Number one, we have what's called partners and their party. Famous and their party. How do we treat the partners and their party? So that should be non-allowable expense. Non-allowable expense. The second, we have what's called staff catering expenses. Staff catering expenses. Staff catering expenses. How would you treat the staff catering expense? The staff catering expense, that should be allowable expense. For the staff catering, that should be allowable expense. And lastly, on that additional information number 2, we have embezzlement by cashier. Embezzlement by cashier. How do you treat embezzlement by cashier? When you're told a cashier embezzled fund, you cannot tell a taxman that that is an expense. If a cashier, non-allowable expense. So that also needs to be added back. So we proceed to the additional information number 3. The examiner tells us that bad debt represents a general provision. So look at bad debt represents what we call a general provision. So bad debt. So when you say general provision, how do you treat general provision? General provision is a non-allowable. So the figure for the budget, is it allowable or non-allowable? The figure for the budget is non-allowable because it is a general provision. I've said in taxation, we only allow what we call a specific provision for budget altogether. But we do not allow a general provision for bad and doubtful debt altogether. What is the difference between the two? I know in accounting or in a fund, when you have an increase in general provision, it's treated as an expense. Increase in general provision for bad and doubtful debt, we treat it as expense altogether. However, in taxation, an increase in general provision for bad debt is treated as an allowable expense. We only allow what's called specific provision. The essence of this, when you talk about general provision, we say it's always based on estimation. Are we together? This is normally based on estimation. Together, team. So when you say a general provision, it is basically based on estimation. And that is in taxation, we do not allow that. Together, team, we give it a yes. If we are together, we give it a yes. We give it a yes. So then we proceed to the next. We're being told, so that bad debt is non-allowable. So we go to number 4. So legal fee comprise of the following. Legal fee comprise of the following. So the first legal fee is what we call a parking fine. Parking fines. The first legal fee is what we call a parking fines. So all that is a non-allowable expense. Number 2 is what we call settling a dispute with the customer. We call it legal fee in relation to customers and debtors. Martin, how do you treat it? Legal fee in relation to customers and debtors, that should be allowable expense. That should be what's called allowable expense. And lastly, we say appeal on tax assessment. Appeal on the tax assessment. So the last one is basically on appeal on the tax assessment. Appeal on the tax assessment, that should be non-allowable expense. So look at additional information number 5. Additional information number 5. So the examiner tells us that investment allowance were agreed at 380,000 with the Commissioner of Domestic Tax. If you're told that investment allowance was basically agreed at a figure of XYZ by Commissioner of Domestic Tax, what is it telling you? Are we going to calculate? No calculation needed. Are we together? Even if you had investment allowance, are we together? I hope that is at home. Is that information explained perfectly well? Is the information explained perfectly well, even for our newcomers? Those who are joining us today, is the information basically explained perfectly well? Thank you so much. Thank you so much. So then I want to move to the required. We can go to the required. Number 22. Which method are we going to apply in preparing the adjusted taxable income for the year ended? So we're going to use the net profit method. Why net profit method? Why net profit method? Because accounting profit has been provided. Then the second item is basically talking about allocation of taxable profit or loss in C above. So we start with the first one. What is the name of partnership? So we call it Mambo Motor. We call it Mambo Motor, and what's called and motor car partnership. We say adjusted. We call it adjusted taxable, adjusted taxable profit for 2022. So we have the figures here. We have figures there. So we start with accounting profit provided. So we have the accounting profit. This is provided, accounting profit provided. So what is the figure? That should be at home. What should be the figure? So the figure is 1,597,000. So we have 1,597,000. 1,597,000. We have 1,597,000. Then you say you add back, we call it add back. Look up add back. What are we adjusting? We say, look at the words. We say non-allowable expenses. Non-allowable expenses. We say in P&L, and they say and what's called taxable income. We say not in P&L, and the taxable income P&L. Together, team, we respond with yes. Please explain. We've said that the reason why we use the net profit method is because we've been provided the accounting profit. Are you seeing the P&L? That P&L means that we have been provided with the accounting profit. So the reason why we use the net profit method is because we have been provided with accounting profit. So everybody, are we together? Respond to the yes if we're together. If we are together, you give it a yes. Give it a yes if we are together. Perfect. So look up. Also very important that we are in an exam scenario. When you go to exam, I will not require you to write this. Look up, team. These are now the shortcuts. Do you think you're required to write non-allowable? Do you think that somebody is going to mark because you write add back non-allowable expenses in the P&L and taxable income not in the P&L? What is my instruction? As the low-hanging fruits, we say that very importantly, remember, you don't need to write this. Martin, is that noted? You know what is needed. For class purpose, I have to write this because I'm teaching. I have to show you that what are we adding? Non-allowable expenses in the P&L and taxable income not in the P&L. But now for the student, when you get to exam, just write add back. You don't need to write the whole thing. Is that noted? That is there for you to save time. It is there for you to save time. So we start from the P&L, the non-allowable expenses that are in the P&L. So we call the first one is depreciation. We have it as depreciation. What is the figure for the depreciation? So the figure for the depreciation is 148. The figure for the depreciation is 148. So we proceed to the next, we have value added tax. Value added tax. So we have it as the value added tax. What is the figure for the value added tax? The next non-allowable, that should be 1. I hope it is 150. I hope it is 150. What is the figure for the purchase of furniture? That should be 620. Purchase of furniture, 620. Then you have goodwill written off. We have the goodwill written off. So for the goodwill written off, that is 225,000. Then you have interest on capital. Interest on capital. Interest on capital. So we have Mambo, and Motor. Is there anybody we are losing, or we are together? Favored tuko pamoja? Favored, are we together? Wait first. I'm still on income statement. I'm going to additional information. Don't worry, is when I'm going to the additional information. Is everybody okay up to this point? Perfect, if you're together. So I have an issue with this. Look up, team. Are we together? Look up, team. I have an issue with this, and it normally happens a lot. This one normally happens a lot. This one normally happens a lot. And based on the fact that if you look at this setting, nobody is going to mark a full paper. So it means that everybody is going to mark. Each and every marker is basically going to mark only a single question together. Each marker is only going to mark a single question. So look up, when you turn interest on capital, like we have interest on capital, some students normally love merging it together. Some students will say interest on capital, then you add 140 plus this, that should be to 20. Are we there? Some students, Regan, switch off the video. So when it comes to this, look up, team. When it comes to this entry, the problem is that, and I always advise my students that for this, separate it together. Let's say, for example, you have a marker who's rushing. So most of the time, you will not know together. You can easily get it wrong together. Or you can easily get with a single entry. Marube, switch off the video. Make sure you switch off the video. Regan, switch off the video. So then you make sure that you separate those items. Is that noted? We respond to the yes if that is noted. If that is noted, we give it a yes. So don't have it as a summary. Of course, it should be right, but now depending on whoever is marking that paper, if it's rushing and in an entry, Regan, switch off the video. Kindly switch off the video, Regan. Regan, are you able to hear us? Marube, kindly switch off the video. Yes. Switch off the video. Switch it off, kindly. Switch off the video, Marube. So perfect. So then we say that interest on capital, that is noted. Instead of having it as a single entry, separate so that you do not miss on that particular entry. So perfect, how together. So I want us to proceed to the next additional information on the additional information. So being told that advertising expenses include 120 spent on neon sign. So just come up on this additional information. We have what's called the neon sign. So what is the figure for the neon sign? The figure for the neon sign is 120. Give me a yes if you're together. The figure for the neon sign is basically 120. So the figure for the neon sign is 120. So then we proceed to the next additional information on general expenses. We have partners and year party. We call it partners. And you say an year party. So for the partners and year party, the figure again is 150. We have it as 150 by cashier. So what is the figure for the embezzlement by cashier? The figure for the embezzlement by cashier. So embezzlement by cashier is basically a figure of 210. Embezzlement by cashier is a figure of 210. I hope you can see those entries perfectly well. So I want us to stretch to this other side of the board. We extend the board. We have this. We can have our line for the board on this other end so that we make it so then We have it on this. We'll continue on this at the end. Are you able to see the board? Are we able to see the board perfectly well? If you're able to see the board perfectly well, we respond with yes. Thank you. So then we go to the next bad debt, a general provision. So we say general provision for bad debt. So we call it Elizabeth, general provision for bad debts. Bad debt. So that bad debt is general provision. So what was the figure for that bad debt? The figure for the bad debt? Give me the figure for the bad debt. So that figure should be 250. Is it 250? Respond with a yes if that figure is 250. If the figure is 250, we give it a yes. So then we proceed to the next. We're being told legal fee comprises of the following. We say that parking fines and unallowable parking fines, that should be 130. Parking fine should be 130. Settling a dispute with customer was allowable. Appeal, then we have lastly, appeal on tax assessment. We call it appeal on tax assessment. Appeal on the tax assessment, that is 210. So get for me total non-allowable expenses. Add for me the total non-allowable expenses. Add for me the total non-allowable expenses. Allowable expenses. The total non-allowable expenses. What is the total non-allowable expenses? If you add them, you have it 24, 33. So that is okay. Can somebody confirm that? Did you say less? We move to less to what you call deduct. So say here less to what you call deduct. Then we'll give you some secrets. Deduct, what you call non-taxable. Non-taxable. We call it operating income. Operating incomes. If you say in P&L, non-taxable operating income in the P&L, we have investment income. We have the investment incomes in P&L, investment income in P&L. Then we have allowable expenses. We call it not in P&L. Allowable expenses not in the P&L. Again, for teaching purpose, we're saying that for teaching purpose, we're basically saying that for teaching purpose, we're saying that we must show what we are lessing. So we're saying that what are we lessing? Non-taxable operating income. For example, what is the examples of non-taxable operating income? Example of what we call the non-taxable operating income. Example of the non-taxable operating income. So example of the non-taxable operating income, unrealized foreign exchange gain, unrealized foreign exchange gain. Then you have investment income. For example, dividend income is not a business income. Dividends income is not a business income. Interest income is not a business income. Then lastly, we have what's called allowable expenses not in the P&L. If you're given an income statement by an accountant, ultimately, one of the allowable expenses that you not find in the income statement is what? Is the investment allowance. Then in summary, we're saying for exam purpose, don't write this, you'll be wasting time. In an exam purpose, you just say, let's talk deduct, and you already know what you need to learn. Delivery van, proceed. So we call it sale of what we call of delivery. We call it delivery van proceeds. What is delivery van proceed? Because that is a non-taxable operating income. What is the figure? The figure is 1.4. The next we have what's called allowable. So the figure for the investment allowance, it is provided. So you don't calculate because this is already provided. So the figure is 380,000. So how much do we less? Get the total that we need to less. Get the total that we need to less. So get the total that you need to less. Get the total that you need to less. So what is the total? This should be 17. This should be 1780. So then we have what's called adjusted. We call it adjusted taxable profit. Adjusted taxable profit. So what is the figure for the adjusted taxable profit? The figure for the adjusted taxable profit. Give me the figure for the adjusted taxable profit. Seven plus 2433 and minus 1780. That is 2,250,000. 2,250,000. So tricks, for example. So tricks, we just talk about tricks. Tricks on exams, on what you've done. Tricks on the exam. Look at Chile. So number one, when you're doing this paper, I hope you're there. Number one on this paper, the first trick, the goal is not perfection. Number one, you need to understand the goal is not to be perfect altogether. Is that noted? The goal when you're doing these papers, the goal is to make as many entries as possible. The goal is not for you to be perfect. It's for you to get the right calculation. Because even this marks, it doesn't account for anything in this particular one. In this particular adjusted taxable profit, this will not add to any mark altogether. This particular summation that we've gotten, it does not account for any mark altogether. So as a trick, we're saying that the goal is basically to make as many entries as possible. The goal is not to be perfect, but it's to make up as many entries as possible altogether. So when you're doing this paper, in part one, adjusted taxable income, your concern should not be to add. But your concern should be basically making as many entries as possible. Juliet, are we together? Have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I have about 15 entries altogether. So if you look at this, this is about 7 marks. If we have 15 entries, logically, the examiner would want only 14 entries altogether. So have you seen me checking on that particular one question? Have I checked on this solution? I have not checked on it, because what is important in the first information on the adjusted taxable income is the entries, not the solution. So let's say, for example, Juliet, I'm in an exam scenario. Let's say, for example, I am in an exam scenario, and I find myself, I have not added this. Should I panic? Juliet, should I panic? If I don't have time, should I panic? And just decide to guess. As long as I've done the entry and I have no time, I'll just come and guess. I can even guess 1.5. Are we together? I'm saying if you don't have time, don't panic. Are we together? I'm saying don't panic at all. However, because this is partnership, if it was a company, then if it's a partnership, the only thing that you're going to miss automatically, if this is not right, be assured that you are not able to get the share of profit and loss, share of what you call profit and loss. That is the only thing that you're going to miss on the second part. That is the only thing that you're going to miss on the second part. As we move to the second part, I'm saying very importantly that what you're likely to miss when you're now moving to the second part is what you call the share of profit or loss, share of profit and loss, because this one now means it has to be correct. But if it was a company, for example, if this was a company, not now a partnership, even if I write my 1.5 and I'm told taxable income, I'll simply say 30 times that and I have everything. If there's no withholding, I'll just have my all marks. But now for partnership, if this one is not correct, the only thing that you're likely to miss is the share of profit or loss. So I want us to go to allocation. Let's move to allocation. Are we there? We respond to the yes. If we are there, we respond to this. So I move to the other part. Once I move to this other part, We call it this part B. We call it allocation schedule. We call it allocation schedule. We call it the allocation partnership allocation schedule. We have the partnership allocation schedule. So on the partnership allocation schedule, how many partners do we have for this particular question? How many partners do we have for this particular question? We have 3 partners. So we have Mambo, we have Moto, and then we have what's called Motor Car. So then we have what's called total C. So I want students to understand what goes to the partners allocation schedule. That is what you need to know, number 1. So that some things you just put them there. What goes to the partners allocation schedule? Salaries to partners. Are we together? Salaries to partners. We have interest on capital. We have bonuses to partners. Are we together? All commissions to partners. We have interest on drawing, not drawing, but you have interest on drawing. So we say, what goes to the partnership allocation schedule? That means that you need to understand what we call the format of partnership allocation. Did we provide the format for partnership allocation schedule? Was it provided? It was provided. So one of the things, again, also very important about interest on drawing in this particular question, we do not have interest on drawing in this particular question. So I come here, but you have interest on capital. Do you have interest on capital? Interest on capital. Do you have interest on capital on this particular question? Interest on capital. If you have interest on capital, we agree. So if you look at the interest on capital, we pick on the interest on capital. Mambo gets 80. So we have Mambo 80. Moto, we have, Moto is going to be 140. Moto is 140. Do you have motor car? We don't have motor car. So the total here being to 20. A total basically being to 20. Here, what we call share, or what we call profit, so what we call loss. All that, all that, share of profit or loss. Then you have the net, we call it the net taxable, that is from the net taxable operating profit. From the adjusted taxable income, what is the net taxable operating income? That should give us 22. We have it 2250. Are we together? 2250, 2,250,000. Give me a yes if we are there. So this one we call it B. We give it a call and we call it B. We call it B. We call it B. We call it B. So the next one, we basically, this one we call it A. Are we together? How do you get the profit share, which is in the middle? We call it C. So this C should be B, which is the net taxable operating income, plus summation of what we have here, summation of A. So what do you have as the profit share? What is the difference? Which is the profit share? B minus A. What are we having? B minus A. What are we having for B minus A? What do you have for B minus A? B minus A, what do you have? So somebody say 2030, that should be 2030. So this is shared based on ratios, based on ratios. Do you have the ratios? Based on ratios. So this is basically shared based on ratios. This is basically shared based on ratios. So we have the ratios. We had Mambo, Moto, we had Moto, and then we had Motor Car. So we have Mambo, we had Moto, and then we had Motor Car. Mambo, Moto, and then we had Motor Car. So Mambo was basically getting what? Mambo was getting a half times that figure, 2030. Moto and Motor Car were getting a quarter, 2030. Then this also a quarter times 2030. 2030, what do you have? What do you have? So this is 1 million 15. What about for the two more motor car? So that's 507, 500. 507, 500. So we get what to call. What is the total? What is the total? So we have 1095, 1095. So the next 1095, then 507, 507, plus 140. 647, we have 647, 500. Then we have 507, 500. Are the figures correct? Are the figures correct? Kindly confirm if the figures are correct. Kindly confirm if the figures are correct. Are those figures correct? Give me one yes if those figures are correct. So perfect. So then we'll say add the taxable, taxable investment income. For example, do we have other taxable investment income? For example, farming, rental income, dividends from cooperative society, dividends from cooperative. Do you have other taxable investment income? In this particular question, do we have? Do we have? We don't have. So for this question, we don't have. If we had, we would have added. So then we say total taxable income, total taxable income. So we don't need to even extend this to the income. How are we going to tax the partners? We say that we're going to tax the partners on what? On a graduated scale. We are going to tax the partner on a graduated scale. On a graduated scale. Perfect. Are we together? So look up. So this answer, the reason why most students will not get this answer for partnership, this one will be one of the hardest answers to get because this is tied to you being correct on adjusted taxable income. Are we together? Most students will not get this correct because this is tied on you being accurate on the adjusted taxable income. Are we able to note it? So if this question is 2 marks, look at 1, 2, 3, 4, 5. But for this, in most cases, because students don't get this, so it's pegged on this. Like for this particular question, if you had gotten this and this, then you would have 2 marks. If we have got, so that is 2 marks. With this, you'd have gotten 2 marks. In most cases, students will not get these figures because students are not always correct. You'll find that all students do not get this. Are we together? Under rare cases, you'll find students being accurate. So for this particular question, you only need to get this, put this and this, and you have the whole mark, and you have the whole mark. Is that understood perfectly well? I want to pick a complex question. Yes, it's good to have a complex question. I want us to pick a complex question. I want us to pick a complex question. Is that understood? We respond with a yes if that is understood. If that question is understood, Juliet, to my lawn. Juliet? Perfect. Is there anybody with a question? Is there anybody with a question? Is there anybody with a question? Nani and Aswali, for the newcomers, those who are joining us for today, who has a question? I believe none. On December, there's a bit of a complex question, but a very good question. Check December. If you look at December 23, there's something on partnership. There is something on partnership. Yes, Patrick and James and Patrick, Highway Enterprise. So is there anybody who needs a break? Ama tuendelee. Is there anybody who needs a break? Ama tuendelee. Is there anybody who needs a break? Kindly let me know so that I can give you a break or tuendelee. Yes. How many minutes break? How many minutes break? We don't take a lot of time. So why don't we settle on the middle 7? So it's 7, it should be back 7. We make it 7. Okay. Three, question 5. We call it question 5D. 5D. Question 5D. Question 5D. Question 5D. So if you're there, we get this. So we've been told that James and Patrick, we're told that James and Patrick are partners trading as a highway. So being told that partner trading as highway enterprise are partners basically trading, and you say trading as highway enterprise and sharing profit and losses equally. So what is the profit and loss sharing? So that basically, Davis, are you there? Davis, are you sorted? Davis, if you're there, you give me a yes. Davis, is everything okay? Davis, is that okay? Okay, perfect. Sharing profit and losses equally. So when you say sharing profit and loss equally, that's half. Are we together? That's basically half. Are we together? 0.5, 0.5. So then you're being told that the following information was extracted from the books of accounts. The following information was extracted from the books of accounts for the year ended the 1st December 2022. Again, we're given the income statement. Are you seeing we're given the income statement? Are you seeing we're given the income statement? Get the same concept. So we're being told that, number one, we're being told that sales a taxable income or a non-taxable income? Sales. Is sales a taxable income or a non-taxable income? Sales. Is sales a taxable income or a non-taxable income? Then we have the rental income for commercial property. Rental income for commercial property. Is that a taxable income in relation to the business, in relation to partnership? So that's not a business income. Rent is not a business income. Are we together? Rent is not a business income. Betty, that's an investment income. However, it is an investment income that is subjected to further taxation. Betty, are we there? It is an investment income that basically is subjected to further taxation, implying that the rental income for partnership, we are going to take it to allocation schedule. We are going to take it to the allocation schedule. We are going to take it to the allocation schedule. Tafadhali bonyeza yes. Are we together? I hope that is understood. So the next we have what's called dividend income. We have the dividend income. Dividend income. And that is a gross figure. So dividend income is also an investment income. Dividends income is also an investment income. But remember, not only dividends are together, not all dividends, but you say dividends from cooperative society other than SACCOs. If you receive dividends from a limited company, but if you receive dividends from a limited company, that's a qualifying dividends. So the only dividends that we take to the allocation schedule is dividends that is non-qualifying, and the examples of non-qualifying dividends, that is dividends from cooperative society other than SACCOs. Is that noted? Give me a yes if that is noted. Give me a yes if that is noted. Perfect. So then we have what's called the sundry expenses. Sundry expenses, is that a taxable income or a non-taxable income? Sundry expenses, is that a taxable income or a non-taxable income? Sundry expenses. Sundry expenses, is that a taxable income or a non-taxable income? No, that's a taxable income. Sundry receipt. Sundry receipt. Sundry receipt is a taxable income. Are we together? That's a taxable income. Sundry receipt is a taxable income. We give it a yes. Sundry receipt is a taxable income. Give me a yes if you're together. If that is at home, you give me a yes. So then we proceed to the next. We have gain on foreign exchange realized. So the word realized makes it gain on foreign exchange realized. So what does it mean when the examiner says gain on foreign exchange realized? Is it taxable or non-taxable? Gain on foreign exchange, and the word is realized. So what does it mean? Is it a taxable income or a non-taxable income? Gains on foreign exchange realized. Juliet, what is that? That should be taxable. When they say unrealized, how do you choose it? Unrealized. Unrealized, that should be non-taxable. Unrealized is non-taxable, yes, or not taxable. Then interest on deposit with foreign bank. Interest on deposit with foreign bank. Interest on deposit from foreign bank. So interest from outside the country. How do you treat interest from country? Those are tax exempt. In fact, they call them tax exempt. Well, those are tax exempt. So when you receive interest from outside the country, we call them tax exempt. So those ones, we are supposed to, that should be non-taxable. So then we have the next, we call it profit on disposal of machinery. Profit on disposal of machinery, that is profit from a capital expenditure. So that's a non-taxable income. That is a non-taxable income. So then we have what's called less expenses. We move to the expenses. So number one expense, we have cost of goods sold. Cost of goods sold as an expense. Cost of the goods sold. How do we treat the cost of the goods sold? Cost of goods sold. Cost of the goods sold. Cost of what we call goods sold. Non-allowable. So registration of patent is non-allowable. Then say hosting a business website. Hosting a business website. Hosting a business website. Hosting a business website. That's a non-allowable expense. Non-allowable expense. Hosting a business website, that should be a non-allowable expense. Hosting a business website is a non-allowable expense. The next, we have what's called purchase of a computer. How do we treat purchase of a computer? That should also be non-allowable expense. Then you have what's called staff salaries and wages. Staff salaries and wages. Staff salaries and wages. The word is staff, so that should be allowable expense. So then we go to the next, partner salaries. We have James and Patrick. So the partner salaries, those are outrightly non-allowable expense. That is for the partner salaries. Then we have what's called audit fee. Audit fee. Audit fee, that should be allowable expense. Then you have insurance. 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 That should be allowable. Purchase of office machinery. Purchase of what is called office machinery. So how do we treat the purchase of office machinery? Purchase of office machinery, that's a capital expenditure. We claim investment allowance on that. Then you have commission to partners. Commissions to partners, payments to partner. How do you treat them? Commissions to partners. Commissions to partners. Commissions to partners, that should be non-allowable. So then you have the next, stamp duty. Stamp duty. No. Bank charges is different from loan. Bank charges are interest rate. So bank charges are allowable expense. Then you have what you call fixing of neon sign. Fixing of neon sign. Fixing of neon sign. So that's not allowable because neon sign is a capital expense. Are we together? Fixing of neon sign, that should be non-allowable expense. Fixing of neon sign, that should basically be non-allowable expense. So we have the next, we have what we call VAT paid. All forms of taxes, VAT paid. VAT paid is what? Is non-allowable expense. VAT paid is a non-allowable expense. Then you have the next, what we call gift to employees. Before that, we have legal fees. How do you treat the legal fees? Legal fees. Legal fees. If there's no additional information is allowable. However, we check the additional information. It's important that you check additional information. Then you have gift to employee, gift to employees, gift to employees, gift to employees. So we had repairs of machinery, repairs of machinery. That should be on the repairs of machinery. Repairs of machinery, no. Repairs of machinery is different from machinery, purchase of machinery. So repairs of machinery, Betty, that should be allowable expense. There's a difference. Repair of machinery is a revenue expense, which is allowable, but purchase of a machinery is a capital expenditure. So that is a capital expenditure. Favored, are you there? Favored and the rest of the team, are you there? If we are there, we give it hints. Ibrahim, are we there? Thanks, Regan. Are we together? Regan, I hope you're there. So then we have what's called, we have the next item, we have the gifts to employees, what we call the gifts to employees for attaining, for meeting the targets. Will you allow that? For meeting the targets. When they meet the target, gifts to employees for meeting the targets. For meeting the targets. Why do you say that allowable? Is it because these guys are basically achieving the target? So that should not be treated as non-allowable. That should be allowable. Are we together? Are we together? So then we have the next, we call it, we have what's called, we have the next, donation to Red Cross. We say donation to Red Cross. So they've not just said donation to a local church, they've said donation to Red Cross. But they say donation to Red Cross. Red Cross. Is that allowable or non-allowable? Donation to Red Cross. It's a charity. When they say Red Cross, then that should be allowable. Are we together? Are we together? So then we have the next, the cost of, loans to employees written off. Loans to employees written off. Is that an allowable expense? Really? Loans to employees written off. Loans to employees written off. Can you tell a taxman that loans to employees written off is an allowable expense? Is that allowable expense or non-allowable expense? Loans to employees written off. That should be non-allowable expense. That should be non-allowable expense. So then we have the next, what we call the cost of relocating to a new premise. Cost of relocating to new premise. So the costs that are related to relocation. So cost of relocation to a new premise. Premise is a capital expenditure. In fact, when you talk about premise, these are more capital in nature. When you talk about relocation, we have, when you talk about relocation, we have a lot of it is on capital expenditure. Are we together? Look up, when you are relocating, we have Musa and the rest of the team. When you are relocating, a lot of expense is basically incurred on a more capital in nature. Are we in agreement? Look at him. Are we in agreement when you are relocating? Yes. So that's why in most of the cases, however, if they're very specific, that this was transport from X to Y expense. However, when they say that I'm saying somebody has a very good question here. Betty, forward that question again. Maleo, please explain, are we relocating to our own building? We are saying, Betty, give me a yes, Betty. Most of the time when you talk about relocation, Most of the time when you talk about relocation, Betty, most of the expenses are basically capital in nature because you're buying assets altogether. You are you're buying assets. You are most of the cost. However, I'm saying this. However, Betty, if you're told that this location was basically maybe transport, if it's like for example transport moving, then that would be allowable. But however, on relocation, a lot of expenses altogether. Most of the expenses are basically incurred on what? On capital in nature. So that's why most of the cases, when you're told cost of relocating, we will always treat it as non-allowable expense. Non-allowable expense. Betty, I hope I've answered you. Respond with a yes if you're together. Respond. Uh, thank you so much. Are we together? Then we have the next. We have what's called redundancy payments to employees. Redundancy payments to employees. How would you treat redundancy payment? Redundancy payment to employees. Redundancy. How would you treat redundancy payment? You're laying off, that can be treated as allowable. Then you have investment seminar for the retired. Investment seminar for the retired. Investment seminar for the retired. How would you go about investment seminar for the retired? For the retired, how would you go about it? Investment. Why do you say non-allowable? If they're in the process of retirement, that would be allowable together. We'll go avoided. When you're laying off people, are we together? No, it means that retirement is a process altogether. Retirement is a process altogether. Are we together? It doesn't mean that they are fully retired altogether. So those who are retiring, you can have an investment seminar for them, maybe just to educate them. Are we together? I'm saying, you see, when you say retired, it doesn't just mean that investment seminar for the retired employees. It's a process altogether. Sometimes, for example, when you're retiring employees, are we together? You also train them on how they'll basically do what? They'll basically survive outside there. Are we together, everybody? So for those employees who are retired and you're basically so that's outwardly non-allowable. So if you look at accounting profit, this business is basically making a profit of 11,745. So which method are we going to apply if it's all to get adjusted taxable income? Adjusted taxable income. So you're going to use that. So I want us to go to the additional information. Though our time is running, we can try and finish this together. So insurance, look at insurance. So we told that insurance cover for imported machinery, insurance cover for the imported machinery against loss on transit. Against loss on transit. Against loss on transit. Then we have insurance cover for the business premise. So insurance cover for imported machinery. Is that an allowable expense? Is that an allowable expense? Is that an allowable expense? Insurance cover for an imported machinery. We've done capital investment. So when you have insurance cover for an imported machinery, investment allowance, that is going to be added to the cost of machinery, and you claim investment allowance together. That is going to be added to the cost of equipment of machinery, then you claim investment allowance. So that is non-allowable. Together, team. Betty, I'm saying, if you understand the concept of investment allowance, we are going to add that to the cost of the machinery, and then we claim investment allowance. Together, team. Give me a yes if we are together. Give me a yes if you're together. So then we have what's called insurance cover for the business premise. insurance cover for the premise. How would you treat the insurance and the bank? What did you say? Legal costs incurred to draft a loan agreement. How do you treat it? Non-allowable expense. That should be non-allowable expense. Are we in agreement? That should be non-allowable expense. So then we have the cost of carriage, the cost of carriage of machine, the cost of carriage of what we call the cost of carriage of machine to the premise, the cost of carriage of machine to the premise amounted to 34. So carriage of machine to the premise. How are you going to treat that carriage? Very interesting. Again, it's an carriage of machine to the premise. Have we used the machine? Yes, you add it to the machine. That should be non-allowable. That machine has not been used. Are we together? That machine has not been used so that we add it and claim investment allowance. So then we're being told that inventory was, closing inventory was overvalued by 25,000. Opening inventory was undervalued by 48. How do we treat inventory that has been overvalued? What do you do to the inventory that has closing stock that has been overvalued? Do you have them in the notes? Do we have them in the notes? Do we have them in the notes? So if the trick again, I told you mind, what was the secret, Betty? Maybe on one area. What is the secret, Betty? If you don't, opening stock undervalued. Opening stock undervalued. So when an opening stock has been undervalued, what does it mean when an opening stock has been undervalued? How does it interfere with the gross profit when opening stock has been undervalued? If we undervalue an opening stock, what happens to the GP? Jeff, what happens to the GP? Did I teach on that? Did I teach on that? Somebody just to confirm whether I taught on that. Was it taught? I'm asking whether it was taught. Yes. Was it taught? That is what I was confirming from you. I'm saying, was it taught? Was the concept taught? Perfect, if it was taught. So those are very good instructions. So we say that when you don't understand on those opening and closing inventory, when they are overstated or understated, you are in a panic mode altogether. You are in an exam. What did I say, Betty? A body. When you're under that circumstance and you don't know where to pick it, put it on addition and put it on less, so that you don't miss the end, add and deduct at the same time, so that you don't miss on that entry. Yes, that is why we did, but not the whole paper. Don't make the whole paper that everything you're putting added less. You'll appear like you don't know anything. Yes. Is there somebody who's going to give us the 95? I want to work on those theories so that we at least we get somebody on the 90% in this class. So I want the next 4 classes so that I teach you some things on theory. Public finance and taxation. Yes. At least somebody should give Mwalimu a 90 and above. That should be better for us. So we can finish on that, but we're going to meet on Saturday in the morning. Please note, our representative is not here. I'm going to meet you on Saturday morning, and I'm going to meet you Saturday in the evening. Is that noted? Saturday morning and Saturday evening. Then the other week, the 4 classes, I want to use them for theory. So just to guide you on theory. And we can also talk about areas that are very sensitive on those theory that are likely to come. So we can close there. Unless somebody, for our newcomers, you can reach us on our college number. This is our college number, 451 155. So this is Focus Online College. This is Cpa Odongo's number. Yes, you can consult us. This is basically for CPA Odongo. Yes. You can follow us in our YouTube. You can look at Cpa Odongo, what I've done in the YouTube. You can learn how to get it. Kindly employment question model. I'll assist you, Juliet. We will do that. Monday and Saturday. Monday and Saturday. Monday and Saturday. Saturday, we normally have two classes in the morning and the evening. All the blocks, once you join. So you can reach us on those numbers. So you can say that God bless you and God bless our class. Unless somebody has something that is burning. Martin, is there something remaining? Something that you need me to say? Martin, do you have anything? Regan, especially for the newcomers. You okay? Regan, do you have anything? Any question? Favored Musa, do you have any question? Is there anybody with any question? Yes, any question so that you can assist. So we close it there. God bless you and God bless our class. Yes. Yes, I'm giving them today. I'm giving those videos. I'm just settling down and sorting it. I want to discuss some things on those videos I told you. Yes. I wanted you to go through the other videos. That's why I held them a bit. Yes. So we see one another in the next class. So I want us to pick the first question. That is August 2022. August 2022. That is question on VAT, August 2022. That should be question 4B. Question 4B. August 2022, question 4B. We kick start on that. Question 4B. So if you're there, we respond to the yes. If we are there, then we give it a yes. If you're there, then we give it a yes. So say August 2022, question 4B. So we have it as August. So that is on VAT. VAT, August 2022, question 4B. Question 4B. Question 4B. Are you on it? If you're on it, you give me a yes. If you are on it, you give me a yes. You respond with a yes if you're together. Perfect. So we've been told that Zawadi Associates, Zawadi Associate, Zawadi Associate, Zawadi Associate provides consulting services to various clients whose terms of contracts allow clients to pay for the services either before or after provision. So terms of contract basically allows the client to pay December, November, October, November, and December 2021. So then we have the nature of service. We have what we call the nature of service. So number one is audit services to Excel Supermarket, valued at a figure of 700,000. That was basically the service provision was on 25th November 2021. Give it a yes if you're together. If we are together. So what is the tax point based on information that we're given? What is the tax point based on the information we have? So based on the information that we have, what is the tax point? What is the tax point based on that information, number one? So the tax point is basically October. So then we have training services to Kyle Security. The value the value of the service is basically 240. The value of service is 240. Then you say not yet paid. The value of services, the service was November 2021, and the payment date not yet paid. So what is the tax point? The tax point. The tax point is November. Perfect. So then we have consultancy. We have what's called consultancy services. And you told what total children's home. So the figure is 600,000. We have December. The service provision is basically 5th December. We have it as 5th December 2021. Then the payment date is basically November 2021. So what is the tax point based on that information? But what is the tax point based on that information? So the tax point is basically November. So we're told what total children's home. That's not a charity unless we're told that's a charitable organization. Then you have what you call debt collection service to Zuela, debt collection services to Zuela computers, to Zuela computers. So the figure is 820,000. So we have the service provision date, that is 9th November, the payment date as 30th November 2021. As 30th November 2021. So what is the tax point? The tax point is, for that, what is the tax point? The tax point is November. So then we have strategic plan development, that is Basel in Rwanda. Number one, strategic plan. We have Basel in Rwanda. Mention of Rwanda. How do we call that service? Is it a standard rate service? Is it a zero rated? Is it an exempt? To Basel in Rwanda. Services that are provided, that should be zero rated because that is outside the country. So the figure is basically, the figure is 2,150,000. So we say that service provision is basically 10th November, then not yet paid. So what is the tax point in relation to that? Jacinta, what is the tax point in relation to that? So the tax point is, based on that information, the tax point is, what is the tax point? The tax point is November again. So look up, look up. So the management consultancy, we have Shylock's investment. We have what's called the Shylock investment. So for the Shylock investment, the value of the service is basically 1,440,000. Then the service provision date is basically 13th November 2021. Then we're being told there's an information. There is an information here. The service date was not paid altogether. But in terms of, it basically means that 40% was the one that is paid, and 60% is yet to be paid. Is that true, Tabs? Tabs, is that true? 60% is yet to be paid. I hope that is okay. So in relation to VAT, are we going to charge the VAT on the whole figure, or we are going to charge VAT on the 40% that is basically paid? Are we going to charge VAT on 40%, or we are going to charge VAT on the whole amount? So we're basically going to charge VAT on the whole amount. We are going to charge VAT, and we say on the whole amount. So then you have the next, we're being told that internal control reviewed. So we have what's called the internal control reviewed, that is Lemma Limited. So the figure is the value of the service is basically 960. The value of the service is 960. The value of the service is basically 960. So being told that service provision is basically 18th November 2021. However, if you look at the payment date, the examiner tells us that 10% paid on 7th of October 2021. That 10% was basically paid on 7th October 2021. So 7th October 2021. So what is the tax point in relation to that information that is given? What is the tax point? Is it October? Is it November for that particular entry on internal Zipporah? So Zipporah, what is the tax point? The tax point is basically October, because the earlier is the down payment was basically done on 10th, that is 10% on 10th of October. Perfect. Then we have the last information. So on the last information, we are being told that financial consultancy to W Limited. The total value of the service that is on the financial consultancy, the figure is 1.2 million. The figure is basically, so we have the service provision date as 20th November 2021. However, the payment date is 1st December 2021. So what is to that financial consultancy to W Limited? Perfect. So look at additional information. So additional information. So on the first additional information, so being told that Shylock investment. So we're being told that Shylock's investment was declared bankrupt, was basically declared bankrupt on 30th November 2021. How do we deal with the bankruptcy? Was basically declared bankrupt on 30th November 2021. On 30th November 2021. How would you deal with the bankruptcy? That bankruptcy. We are going to claim a bad debt relief on that. We're together. We are definitely going to claim a bad debt relief on it. Are we together? So the bad debt relief is basically going to come on. What amount is going to be a bad debt relief? The percentage that we are going to claim budget relief is a figure of, is it all amount? 60%. Thank you so much. So then we are being told that on 5th November, on 5th November, on 5th November 2021, Zawadi Associate renewed and national training licenses for 30,000 and paid for legal fees. The figure is 360 to follow up clients who are not paying as per the agreed date. So the national training, the national industrial training license of 30,000 and paid a legal fee. Paid a legal fee. How do we treat them? How do we treat them? How do we basically treat them? How do we treat them? How do we treat them? So which one is input? Which one is not input? Which one is input? Which one is not input? So legal fee is basically input. Legal fee is what is an input. So look up additional information number 3. So on the additional information number 3, electricity bill paid, electricity bill paid, electricity paid, bill paid on 10th November, on 10th November, on 10th November 2021 was 270. Are we together? Electricity bill that was basically paid on 10th November, we say 10th November 2021 was 270. Are we together? Was 270. Are we on each team? We are being told was 270. Give me a yes. Perfect. So out of which, look up team, out of which 100,000 was payment for outstanding bill on October 2021. So 100,000 was basically for outstanding bill for 2020 October. So that 100,000, are we going to claim VAT on 100,000? The figure of 100,000. Are we basically going to claim VAT? No, why? Because the tax point was basically October. So we are in agreement that the tax point was basically in October. So the tax point was basically in October. The tax point was basically in October. So we respond with a yes if we're together. The tax point was basically in October. Are we together? So the next information, so 20,000 in shillings, 20,000 was in respect to additional deposit, was in respect to what it called, was in respect of additional deposit as demanded by company power. Additional deposit as demanded by company power. Are we going to claim VAT for the deposit? Remember, that's not an advance payment, but the deposit. Are we going to claim VAT on it? Are we going to claim? No, we are not going to claim for the deposit. If it was an advance payment, then we would have. So look at fuel consumed for partners' vehicles. Fuel consumed for partners' vehicle amounted to 90,000 during the month of November. Amounted to what they call 90,000 during the month of November 2021. How are we going to treat that fuel? So being told that the examiner is very clear and says that fuel for what they call for partners' vehicles amounted to 90. Is that a business expense or a private expense? Yes. Is it a business expense or a private expense? That's a private expense altogether. Yes, based on 20. So we don't claim VAT on the private expense. Together, team, we don't claim VAT on that private expense. So then we proceed to the next. We're being told that Zawadi, before that, we are being told computer purchased for business. Use cost of this computer purchase for business, use cost of 240 in November. So for the computer purchase, what are computer purchased? Computer purchase for the computer purchase. That is an input VAT. That is on purchases and expenses. Then the second last, Zawadi associate paid rent for the month of November, amounting to 180. Paid rent for the month of November, amounting to 180. That is on 5th November 2021. On 5th November 2021. How are we going to treat that? On 5th November 2021. So that's also an input VAT. Then lastly, a very powerful information. So this information basically says the last information basically been stated inclusive of VAT at the rate of 16%. At the rate of 16%, where applicable, unless otherwise stated. What does that statement basically mean? You tell me what that statement basically means. That statement. What does that statement basically mean? As I forward something to somebody. What does that statement basically mean? A minute as I. What does that statement mean? What you say have been stated inclusive of VAT. So what does that basically mean? If you say they have been stated inclusive of VAT, So what does it basically mean? Inclusive of VAT. So what are we using? Sorry, maybe I was not looking at what you're saying. Just repeat again. That is 16 over 116. Perfect. Is everything understood? Back to the output VAT. So we have item, we have items to what we call supply, amount, we have the VAT rate, and then we have the VAT. Tukosawa, and then we have the VAT. Are we able to see that? If we are able to see that, you give one yes. So the first item is audit services. We have audit services. Are we going to include audit services? We're saying for the month of November. So my question is audit services to Excel Supermarket. Is it falling in November? No, it's not falling because provision was October. That is the tax point, so it's not falling. What about training? Training of services to Kylie services. We just noted Kylie services, training, just training by Kylie services. So that the tax point is November. So the tax point for that is November. So we have it as 240, 16 over 116. Give me that. 16 over 116. Give me that. 16. And you say over 16. So you're the guys to support me on that. 16 over 116. Support me on that, team. You're the only guys I have, so there's none that have. So that should be 33, 103. So we have it as 33, 103. 33, 103. So what about accountancy services to a total? Is it falling on November? Which one comes first? The payment. So that is falling on that. So accountancy to a total. Children's home. I know some people say that this is exempt. No. When they say children's home, that is not specifically mean that is a charity. So that should be 16. Get for me that. You're the guys giving me that. Give me that. Somebody has already gotten it. What is the figure? So you have it as 82, 579. So 82, 759. Is it 759? 579. 582. 579. So we have 82, 579. So then we have the next, we have debt collection services to dweller. Is the tax point November? Debt collection to dweller. Somebody says 759. You're the ones giving me that figure, unless you tell me which is which. Somebody, I'm being told I am wrong, but I'm wrong because you're giving me that. Is it 759 or 759? Thank you. I think that is confirmed. What about debt collection service to dweller? Is the tax point November? Debt collection to what? To call to dweller. See, the tax point is perfect. That is 820. 16 over 116. So what are we having? 16 over 116. What are we having? So that should be 113, 103. 113, 103, 113, 103. So we can move to strategic development. Strategic development. So you have it Basel. And the word Rwanda makes it what? The word Rwanda makes it. A mention of the word Rwanda makes it. Switch off the video, Joy. Switch off the video. So the word Rwanda makes it zero rated. So it makes it zero rated. So the figure is 21. We have it 15. 0. If you multiply that by 0, that should be 0. So then we have the next. We have management consultancy. Management consultancy. Consultancy. So we have the management consultancy. That is Shylock. Shylock. That should be the whole amount. So that should be 16 over 116. So what should that be? 16 over 116. So we have it as 198,621. 198,621. 198,621. So we have it as 198,621. Is that correct? Figure correct? So perfect. So then we have the next. We have it as financial consultancy. We have it as financial consultancy. W Limited. So the financial consultancy to W, that is 1.2. So 16 over 116. What are we getting? What are we having? Financial consultancy to W. Financial consultancy to W. Financial consultancy to W. Somebody to give it again to me. That figure, give it again to me. The figure, what is the figure? What is the figure? Somebody just to give it again. 165, 517. 165, 517. 165, 517. 160, just with the output. Is there any item that we need to adjust with the output? Look up. There are two approaches to each together, and those two approaches will still work. So when you see, for example, the two approaches, some people will get what's called the output VAT and what? And get the input VAT less, then get payable or refundable is when they less the V budget. It still be the same. It still work out together. It will still work out together. So I'm saying the scenarios, for example, some people will not adjust the budgets here. but they'll get the VAT payable or refundable is when they less the bad debts, that will still work. Tuko pamoja. That will still work. It will still give us the same thing. I know initially some people would complain and make a big deal out of it and say that bad debt should come because it's coming later. You get the VAT payable or refundable is when you less it. But even if you adjust it here or you get the output, you less from input, then you less the bad debt will still work. So we can adjust it here if you agree on that. So you have the bad debt. So get for me 60%. It was 60% of 1440. Give me the 60% of 1440. What about the audit of XL? So audit of XL, the tax point was October, and the question requires the VAT for November. The product tuko pamoja. X, which one happens first? Service provision. Service provision was in October, basically implying that the tax point is October. Sawa. So then get for me the 60% because you're adjusting. The 60% is what was not paid. So what is the 60%? 864. So we have it as 864. There's 16 over 116, then you less for me that. 16 over 116, then you less for me 172. So get for me total output VAT. Total output VAT. So get for me the total output VAT. Total output VAT. So get for me what's called the total output VAT. So we have it as 473, 931, 473, 931. Is that correct? Then you can get the input VAT if that figure is correct. Input VAT. Input VAT. So we have what we call the item, so what you call supply. We have the amount. We have the VAT rate. Then we have the VAT. Then you have the VAT. So give me a yes if we are together to the output. So the first one is basically, the first one was we have the legal fees. So what is the figure for the legal fees? Legal fees. Give me the legal fees. Legal fees is, what is the legal fee? So what is the legal fee? The figure for the legal fee. Good people? So what is the figure for the legal fee? So legal fee, is it 360? Is it 360? Yes, get for me the VAT on that. Get for me the VAT on that. So what is the VAT on that? What is the VAT on that? The VAT on that. So good people, what is the VAT on that? So that is 49,655. 49,655. 49,655. So the next one should be what to call electricity. Electricity. Based on our adjustments on electricity. Based on our adjustments. VAT. 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 So that was 150. So 150. 16 over 116. So get for me that 16 over 116. Get for me that. What is the VAT on electricity? So that should be 2690. 2690. 2690. 2690. So then we have what we call the next, we call it computer purchased. So say Fuel consumed by partner, that was private. Computer purchase, computers. We had a figure of 240, 116. So what is a computer? So you have it. Is there any total input VAT? Total input VAT. So give me the total input VAT. So 128 to 76. Somebody to confirm what some keys are. 128 to 76. 128, 128 to 76 to 76. Respond to this. 128 to 76. So get the VAT payable or refundable. So VAT payable, so what they call refundable. So that is output VAT minus what we call the input VAT. So what is the output VAT? We have that as 473, 931 minus 128 to 76. So get for me that. So what are we getting? Sami kids gets for me 345, 655. 345, 345, 655. 345, 655. 345, 655. So that question is done. That question is done. Is that question perfectly done? If that question is at home, you respond with a yes. If that question is, are we together? That question. So we talked about the tax point. Did we discuss the tax point? And been able to talk about what in relation to tax point? How would you advise them? So say it's the earlier of, when service is formed, payment is paid partly or only, or invoice is received. Invoice is received, services, whichever happens first, that basically becomes the tax point. That is basically the explanation on that. Together, we respond to this before we move to the next question. Is that question on the tax point? If you're to advise, that should be at home. Are we together? No, we're not saying importing services. You've been asked. Let me open that question again. So this is basically Zawadi Limited is planning to engage a financial management consultant from South Africa so I'm saying, look up, Zawadi Limited, we're being told that Zawadi Limited is planning to engage a firm of financial management consultants from South Africa to facilitate training on financial management assignment. Advise Zawadi on tax point in respect to. Yes, that is more of input. Yes, that is more of input. That is more of input. But now the concept is the same, is more of importing those services. Do you think for import, what do you say about import? Imports are normally? Wait. Somebody say exempt. Imports. When you carry out an import, what do you do to an import? Tim, we don't forget. They're normally exclusive of VAT, not exempted, but exclusive of VAT. All agree, yes, we must all agree as a team that the concept of the tax point is the same, even on application of the import. Is it the same? The concept of the tax point. Is it the same? Agreeing that the concept of the tax point is basically the same. Zipporah, if you're together, you give Mwalimu a yes on that. Yes. If you're together on that, we respond with yes. Allow me to pick the next question. Allow me to pick on the next. Yes. Perfect. So I want us to pick, that is August 2025. Turn to August 2025 question. August 2025 question. August 2025 question. August 2025 question. That was a very interesting question. August 2025 question. August 2025 question. So that is question 1B. Question 1B. Look at that question. It was a very good question. A very interesting question. A very, very interesting question. Together. So are we on it? Are we on it? Thank you for both taxable and exempt supplies. So the following transactions are recorded in the books of the company. The following transactions are basically recorded in the books of the company. So the following transactions are basically recorded in the books of the company. And say for the month of April 2025. For the month of April 2025. So one, sales at standard rate, that is a figure of 1,160,000. What is that? 160,000. What is that? That's an out. Then we say sales made as exempt supplies, 400,000. So the sales made, we call it sales made, sales made as exempt, that is output but now exempted. So then we talk about what's called purchase of stationery on credit, purchase of goods for resales on credit, 580. Purchase of goods for resale, that is 520. What is that? What is that? Purchase of goods for resale on credit. So that's an input PAT. Then we have the next, purchase of stationery on credit. That is 116. Purchase of stationery on credit, 116. So somebody asked a question, does credit affect somebody is asking for something, does credit so let me see what Summit is. Will credit, no. Credit will not affect, even credit we claim on that particular. So then we have the next, we have what you call for a company car. Purchase of fuel for a company car. Purchase of fuel for a company car. So how would you treat it? But I want us to turn that, are we together? Question and number, are we together? I want us to, on that together, there was something on that together. I want to correct it so that it makes more sense. Say that purchase of, don't say company car, of saloon cars. Well, saloon cars, well. Are we together? Purchase of saloon car. To make it more interesting, purchase of saloon cars. I've said, I've fixed something on that. Purchase of saloon cars where? Well, are we together? Purchase of saloon cars where? Together. Purchase of saloon car. I've said, I want to bring something very interesting on that. Are we together? So that the information makes it more. Yes. Purchase of saloon cars. Wait first. I've not said no VAT. I've just said purchase of saloon car. I have not said, have I said no VAT on it? Have I said that? I have not. I've just said purchase of saloon cars well. Is that okay? So don't say no VAT or any. I've not said that. Is that noted? Please, we respond with a yes if that information is clear. I hope I'm clear. I've not said no VAT. I've not said anything. I've just said purchase of saloon car well. Then we have what's called payment of entertainment expense for client. That is 58. We have it as 58. Payment of entertainment expense for client. Payment of entertainment expense for the client. That is 58. So entertainment. VAT Act for 2013. Entertainment, accommodation, catering. How do you treat them? VAT Act 2013. Entertainment. How would we? That should be exempted. Together, team, that should be exempted. Are we together? That should be exempted. 1,160,000. How would you treat that? 1,160,000. So, director, is that a business expense? Is that a business expense or a private expense? That's a private expense. Now tie it to the saloon car fuel. So if you tie it to a saloon car fuel, what does now the saloon car fuel basically means? Saloon car fuel. So it becomes also a private expense together. Are we together? So it's also exempted from VAT because that also becomes a private expense together. Give it a yes if you're together. Give it a yes if we are together. Are we together? Sometimes those who set exams. Now I've said I have changed it. Yes, I have changed it based on. You see, when sometimes I change the question, it is based on something that was examiner did not do. So when markers are marking those papers, they're corrected together. They're basically corrected. Are we together? You see, sometimes we say that sometimes. Are we together? Mercy. Sometimes when I change questions, I just bring another notion, maybe something that you did not see as you. Are we together? Mercy, are you together with me? That is what I'm saying. Are we together? Yes. So the fuel, the word is non-deductible. The word should be non-deductible input VAT. That is the correct one. The non-deductible input VAT. Non-deductible input VAT. The word is non-deductible input or restricted amounts particular. Non-deductible input VAT, the product if together. Yes, that becomes the correct one for it. So then we proceed to the next. We have been told that imported raw materials with custom and VAT paid, imported raw materials with customs and the VAT paid. What is the VAT paid? And the VAT paid, look at that, and the VAT paid was shillings 230. We have it as 230, and the VAT paid was 232,000. Imported raw materials with custom and VAT paid was basically, we have it as, and the VAT paid is 232. Then you have the next, we've been told repair. Repair, so we have it as a repair. we have it as repair, to delivery truck, to delivery trucks, used exclusively for distribution, delivery trucks used exclusively for distribution, that is 58,000. Then we have what's called purchase of goods. Look at this, purchase of goods, purchase of goods. So we call it purchase of goods. Used in both, look up, used in both exempt and taxable supplies. The figure is 348. What do you think about that? I'm very much interested on that. Used for exempt, and what we call taxable supplies. That's a very interesting one. Exempt and taxable supplies. Exempt and taxable supplies. So we say that used for what we call used for goods purchased, we say for both taxables and exempt supply, 348. How would you deal with this? So on this figure, about that figure, there should be apportionment. That should basically carry apportionment. So that figure should basically be apportioned. So rent for business premise, rent for business premise to a landlord registered for VAT, shillings 116. Shillings 116. Oh no, all amount for both. Yes, we are supposed to apportion, because on that amount we're saying that both exempt and taxable supply. Are we together? What should we allow? We should allow for the taxable supply. Are we together? Yes. So we've entered that rent for business premise to a landlord registered for VAT, shillings 160. So what is that for that rent as the last information? For the last information for that. So that's an input. I want us to read additional information and be very keen on those additional information as I read those additional information. Kindly, I want us to be very keen. So the first additional information, so the intro that company uses turnover-based apportionment on the mixed item. So it uses what? Turnover. Do we understand that? A company uses what we call turnover-based apportionment for the input VAT on the mixed. Are we together? So what are we going to say? We are basically saying the turnover that is taxable supplies over total supplies times the VAT on mixed apportionment. When it comes to that, on the mixed apportionment. Together, team, on the mixed apportionment. That is what we call turnover apportionment. Together. Perfect. So then all 16% were applicable. So when your total transactions are inclusive of VAT at the rate of 16%, what do we use? We use 16 over 116. I want us to do one at least. Before I give you a breather, let's do one, the first part of it. Allow me to do the first one is when I give you a small breather. Allow me to do the first one, then I give you a breather. So number one required, compute what's called output, VAT for the month of April. So just do output. One is output, VAT for what I call for the month of what I call of April. Output VAT. Is there anything tricky on that number one? So for the formula, we say taxable supplies. What is taxable supply? This is standard rate plus what? Plus zero rate. But when it comes to total supplies would now be standard plus zero plus exempt. Kindly give me a yes if we are together. Plus exempt. Tafadhali, give me a yes. Perfect. So is there anything tricky on the output VAT? Is there anything tricky on the output VAT? VAT on the mixed supplies. VAT on the mixed supplies. So mixed apportionment, look at the mixed apportionment is additional information, number 25, number 25, number 25, additional April 2025. So that is mixed apportionment together. Thank you, Harriet. Somebody else? Are we seeing additional information number 25, April 2025? Perfect if we are together. And we're getting ready for exam. We shouldn't panic. We are getting ready. I want us to do this is when I give you a small break. So look up the first one on the output VAT. Is there anything tricky there? Is there anything tricky on that? And you're given 2 marks. The examiner compute what's called output VAT. Is there anything tricky? Nothing tricky. If we do it very fast. So this is item, what we call supply. We have amount. We have the VAT rate. Then you have what's called the VAT. So the cells, we have standard rate cells. Standard rate cells. Standard rate cells. What is the figure for the standard rate cells? So the figure for the standard rate cells, give me the figure for the standard rate. What is the figure, Samikis? I want the figure. The figure is not 160. The figure for the standard rate cells, that is 1,160,000. 1,160,000. What is the rate that we're using based on this question? Are we using 16 over 100 or 16 over 116? What are we using? 16 over 116. So what do we get? 16 over 116. What do we have? 16 over 116. So that should be 160. So another cells. Do you have zero rated? Any zero rated in this question? Is there any zero rated in this question? For this particular question, do you have zero rated? We don't have, but we have exempt. Exempt supplies, we just say exempt supply. What is the figure for the exempt supply? The figure is it 400,000? So we have a dash and a dash. So what is the total output VAT? Total output VAT. What is the total output VAT? Give me the total output VAT. So the total output VAT is 1. That gives us 160. Together, that gives us a figure of 160. So with that, the end point is this and this. So if you do that, you have your 2 marks. Is that 2 marks a walkover? That 2 marks, is it a walkover? So take a breather, we come back. I want us to take a breather, and we come back. Take a breather, then we come back. Oh, everybody's in. So we get to the second part. We get funds are restricted under VAT Act of 20, we have it of 20 of 2013. So we get the total input and get the ones that are restricted, amounts that are basically restricted. Total input, and we get input and we get amounts that are restricted. So we have items, to what we call supplies. Supply, we have amount, we have the VAT rate, and then we have the VAT, and then we have the VAT, and then we have what we call the VAT. Together, team, and then we have the VAT. So our focus is on the input now, total input. From there, we shall be able to identify. First of all, we get the total input. Together, team. First of all, we get the total input. We respond to the yes. So, purchase of goods for resale. So we have purchase of what I call of goods for resale. So purchase of goods for resale. The figure is that is 580. What is the VAT rate? 580. VAT rate. What are we using as our VAT rate? 16 over 160. So we have 80. So we have stationaries. So what is the figure for the stationery? So that should be 116. So what do you have? 16 over 116. Give me that for the stationery. Somebody says 16? 16K. Somebody gives it a 16K. So saloon fuel. Well, we had it as 80, 87 times 16. Get it? What does it give us? We get, first of all, and we note that is true. What is the figure? Just so 12K. So 12K, just note it here, restricted. This is one of the restricted. This is based on VAT Act, non-deductible or restricted. So then we have the next entertainment. Entertainment. So the figure is 58, 16 over 116. Get for me that. And so that is 8K. So again, we need to note that this. I hope you understand what the question is saying. I hope we are together. Restricted, 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 restricted. Then you have saloon car purchase, purchase of saloon car for director, saloon car for directors, for directors. So what is the figure we are having for that? So what should be that? Be that. So 160. So we proceed to the next. We have imported raw materials. Imported raw materials. So what are we going to use? Are we still going to use 16 over? Are we still going to use 16 imported raw materials? That should be 16 over 100. So get for me, what do you have 16 over 100? 16 over 100. We just do away with this line. 16 over 100. So get me that 16 over 100. 16 over 100. So that should be 37 120.
Wasn't the 232,800? I'm asking, wasn't
Yes.
the 232,000 equivalent to 16 over 100?
Yes, see that's 16 over 100 because that's input.
No, it said that the VAT paid was 232,000, right?
I think that was also one of the one of the mistakes. It appears like that, but remember the VAT is not there on that. So just clarify that as clarity on that. The 232 is without VAT. I think the way the examiner sets it, that was the issue. So just note that those figures, those are not VAT. Is that okay? Instruction on it together. Zipporah, are we together? Zipporah, are we together? Perfect if you're together. We don't want to leave any person behind. So then we come to the next, we have what's called, we have this, we have this, we have, so we have the next, we have repairs, that should be 58, 58, repairs 58, 16 over 116, 16 over 116. We're saying, based on VAT, Florentina, based on VAT Act 2013, we talked about restricted on the non-deductible input VAT. These are purchases that we cannot claim input VAT on. A given example was on catering, entertainment, accommodation, and the private expenses. That is what you call the restricted or the non-deductible input VAT. Together, Florentina. Yes, so that's 8,000. So you can check on the VAT Act of 2013. You can look at that, the VAT Act of 2013. So we have the next, rent for business. Rent for business. So rent for business, what is the figure? Expenses that we cannot offset against the output VAT, and we call them the non-deductible input VAT. A given example, we talked about catering, accommodation. We have accommodation, entertainment, and then we have the private expenses. That is explanation. Joy, are we together? Joy, if you're together, we respond with a yes. Joy, are we together? Thank you so much if you're together. So then we have the option, but remember, I've not put the lookup because that basically we need to apportion altogether. That has to be apportioned. So the question is, lookup team. Now I tell you why this question. Yes, section 17. So look at this. Look at why this question is such a simple, but then look at it, 3 marks. Are you seeing this? 3 marks. Are you seeing this? So the question, determine the total input. I know some people are wondering if they want determine what you call the total input incurred and identify which amounts are restricted under the VAT Act altogether. So the question, total input, that's why we did this. Then from that, we can basically now get the restricted. Ariet Menipata, Mercy, are we together? Mercy and Ariet, are we together? Naomi, are you there? I hope Naomi is there. Sami Keys, are you there? So, and then we say that for import we say they're normally exclusive of VAT. Jacinta, I want us to be together. Jacinta, are we together? You're the one we're waiting for. You are the one we are waiting for. Jacinta, are we together? Jacinta, you're the one we're waiting for. If you're together, you give Mwalimu a yes. So we're just saying, you see, for imports are normally exclusive of VAT. So VAT is not on that. So we're using 16 over 100. I want you to respond to Jacinta. If there's anything that needs clarification so that we move away from there. Jacinta, you are the one we're waiting for. Kindly assist us to assist you. Kindly assist us to assist you. Kindly assist us to assist you. Is Jacinta there? She's not in. Okay, that's okay. That's okay. That's okay then. So we had we had the mixed. We had the mixed. She has asked and left. We are very sorry. Then we have purchase of goods. We had the purchase. So get for me that mixed. That should be 48. So that should basically be a portion. So the essence of this, why have I done the whole thing? Why have I done the whole thing? Because the examiner says, determine the total input VAT. I know guys were wondering, determine the total output VAT. So we give everything away together. That's why we've gotten that. Is that understood, Zipporah? So now we get to the other part and tell us which amounts are restricted under. Which amounts are restricted? Amounts restricted. So now we go to amounts restricted. So we go to the amounts. We call it amounts restricted. Restricted. So the amounts restricted, we have saloon car fuel. Amount restricted is 12. That. Then we have entertainment. Entertainment is 8. Then we have what we call purchase. Saloon car for directors. Saloon car for what we call for the directors. So what is that figure? Purchase for saloon car for the director. So what is 160? So what is the amount restricted? Get for me the amount restricted. Get for me the amount restricted. What is the total amount that is restricted? The total amount. Imported goods. Some it is. I don't know why we were seeing, but very interesting. Imported raw materials with custom and VAT. With custom and VAT. Are we together? With custom and VAT. So that should just be 16 over 100. Because the examiner has told us with custom and VAT. Zipporah, are you seeing that? Naomi, with custom and VAT. It's okay. We understood with custom and VAT. So VAT is already there. So get for me that. And I think that what Nani raised, what Jacinta raised, that was a very, so because it's very clear with custom and VAT. Is that understood, Mercy, Harriet? Mercy, Harriet, Naomi, I need to mention everybody so that we must be fair. Minor, I've not been mentioning minor. Minor, I hope you're there. Thanks. So then that should be 32. Are we together? That is with VAT. The examiner is very clear with VAT. I hope now you have us there with VAT. So what is the total amounts restricted? Total amount restricted. So amount restricted, we have it there. So that should be total amount restricted is 180. Yes, is that okay? Total amount restricted, that is on 180. So we respond to this. So that part 2 is done. The part 2 is done. So the part 2 is done. So give me a yes if part 2 is done. Perfect. So then we go to the next, calculate allowable input VAT. Allowable, we call it allowable input VAT claimable. So already we have the whole thing. So we just simply come and pick purchase for resale. For resale, we don't need to calculate again because we had 80. Do we need to calculate again? We don't need. Are we together? We had the stationery. Stationery. What is the stationery? That was 16. We don't need to get the VAT again. Imported. Imports. It was with VAT. Import with VAT, that should be 32. Respond to the yes if you're together. Import with VAT, that should be 32. Then we had what's called repairs. We had repairs. What is the figure for the repairs? Repairs should be 8,000. Are we there? Should be 8,000. Repairs should be 8,000. Repairs should be 8,000. Then we have the rent. Rent is how much? What is the figure for the rent? For the rent, what is the rent? So the rent is 16K. So this is on a whole bit because we have to apportion this. So get for me this total that is allowed. Before we apportion that, get for me the total before we apportion. That you cannot take it as a whole because that needs to be apportioned. That needs to be apportioned. That needs to be apportioned. It needs to be apportioned, so you can't take it as a whole. Can you take it as a whole? You can't take it as a whole. You can't basically take it as a whole. Take it as a whole. So you can't take it as a whole. So we're having 152. So when you're apportioning that, what did you say about the standard rate cells when you're apportioning that figure? What did you say on the standard rate cells as we apportion? So we say that the standard